Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. My name is Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. Barry, how we doing?
Doing great, doing great. What a
Ec-
week.
ec- Excellent. We are recording here on Friday, April 5th, after the close. We are going to be Barry's going to be covering his normal stuff, which is the big five, which is ES, bonds, gold, crude oil, copper, the dollar, and the euro. And today I'll be covering corn, soybeans, coffee, silver, and then touching a little bit on gold, copper, and crude that Barry's covering because they are moving.
Mhm.
Lots of things are moving. An interesting thing before I throw it over to you, Barry, the spreadsheet that we post with the levels on them,
Yeah,
lots of changes this week.
yeah, that's right. Big
Lots of
changes.
changes. Yeah.
Hmm.
So there was a lot of movement this week. So without any further delay, let's jump in here. We've been telling people to watch out for a high, and we now have a lower high and a lower low on the
Hmm.
E-mini.
Right, and a false
Take it
break,
away.
and a
And a
false
false
break.
break. Yeah.
Yeah, a lot of stuff going on. And just to let you know, if you're new to the show, I would recommend going back two shows. We spent about 20 minutes covering the basics and the what we're seeing during this cycle, at least this leg, and what to anticipate and so forth and so on, and also the price patterns that we're looking for. And that's fairly in depth, so it'll give you a good frame for how we are looking at this and we're talking about it and how we look at the patterns. Well, last week, the Friday show we recorded on
Monday.
Monday,
Yeah.
and was pretty good timing actually.
It sure
So,
was.
and the week prior, we talked about 5310 and we talked about the 5200. We talked about this box and how, anyway, we talked about all of that. Those are in the prior shows. This week,
I'll be damned if you didn't hit both end of the boxes this week.
yeah, exactly. Right, the whole thing. Um, and now it gets interesting, like they say. So Monday, I mean, the last show, we talked about, we saw this false break. And we were looking for two things, either a false break or a lower high. So we got a false break here in the futures market. And what we left off with was we were looking for a continuation of it. And what we got was we got a little bit of an inside bar. And we always talk about inside bars. And if the timing's in place, market starts to move in a new direction, we get an inside bar. You want to really watch the high or low of that inside bar being taken out.
Hmm.
And on Thursday, we had we had both sides getting taken out, but low getting
Yep.
taken out along with the low from Tuesday. That kind of pulled everything down. And we went down to our support level, which was 5,200. And you can see we bumped into it yesterday and today, and we got a little bounce off of it. So that's where we are. What we talked about sort of came into play, did an ABCD down, in lower time frames. And let's see, in this show, we'll cover, the possibilities going forward. But I just want to know if you guys remember, I just want to remind you, we talked about this one by one and how the market behaves when it's above versus below and what it means for the strength of a trend. And we're definitely well above the one by one that's coming off of the low last
Hmm.
October. You can see we got a bunch of space here. So it's just, market's very, very strong. And if you take, I mean, the other technique is to put it on a
The
reasonable
recent
low.
lows. Yeah.
Yeah, recent low. So, and I'm picking this low in January because that would be the, low to catch, the lowest
Yep.
one. And if you do that, you can see how the low today touched it.
They tapped it. Yep.
So this is something you want to watch. Now, if we at some point take this out, and it's only two things that can happen. One in a downturn, one is to continue to go, the other is to come back and kiss it from below and then drop,
Hmm.
which we see often. So that's something that's we need to keep an eye on because long as we're above the one by one, um, especially the one coming off of the low, the market's still trend wise, it's in a stronger position.
Mm-hmm.
And the near term one by one is, we're still above that, no matter what. One thing to keep in mind with trends and turns is this should be one of our end of the session talks, shop
Yeah,
talks,
exactly.
But I wanted
Exactly.
to just throw it in here. Well, maybe we can talk about it later. Basically, yeah, let's talk about it today towards the end. But the what I wanted to explain was, how do you switch from a trending mode, going in one direction to another direction? So this is a great example, because we are trending, trending up, and then we had all these time cycles expire, price and time squaring out, and all of that. Okay, so what happened? Are we starting a new trend in a different direction? Or is this like a little bit of a correction that we're going to continue on? Which is always the question, right?
Mm-hmm.
And since we're always looking at probability, when it comes, when a certain number of boxes get checked at a potential turn, which means where price and time comes together and balances out the leg, then we're looking into the new direction and we're looking for signs to get us into that. So what I wanted to talk about was that, so when you're in that trending mentality, I think we talked about it a while back, right? I think you brought this up.
A
When
while
you,
ago, yeah.
yeah, right. When you're in a trending mode and you're kind of by that, and then all of a sudden you have a potential pivot or a turn, change in trend, little window. Like, how do you deal with this? This is great because this is in real time, not looking
Mm-hmm.
at the history, not looking at the future,
Right.
right? It's right here, right now.
It's
So,
confronting us right now.
and we'll talk through this. I mean, we do this every week anyway, but we'll talk through this every week as part of the show. We'll do that just because I think it's a great chance for being educated, right, around that topic. And it's never enough, never enough. The more examples you see, the better.
Mm-hmm.
So yeah, let's cover that a little bit later, maybe a little bit more depth.
Sure.
For now, well, just like you said, we're trapped between the 200 and 300, and that's exactly where the box was. So long as it's inside the box, what are you going to do? It's in the same state. Either we need to
Mm-hmm.
break above that, above 5310, or we need to break below 5200
52.
to. And it's funny, we had this 52 a while back, but and you guys know if you've been watching this for a while, but it just so happens today the one by one happens to be crossing right there,
Mm-hmm.
and the bar happens to hit exactly that point. So we're kind of meeting that one by one, and the 5200, which happens to be the lower boundary of this, right? The 135. So, all right. So that's where we are. What are we looking for next week? Well, before we do that, let's take a quick look at the
The weekly.
yeah. Well, the what I wanted to look at the cash that we
Uh-huh.
we looked at last week.
Yeah.
So all the different squares that we look at every week. So this is the SPX. And I track, calendar days, trading days, cash, and the futures, how they all move because they all kind of fold into the new trend when the time is right.
Mm-hmm.
And here the cash was kind of sort of leading the way because leading the way in the sense that it was really getting some good traction on the square 144, which is Gann's master square. So here, we got it pretty much pegged, plus or minus one day. We got the high coming into the 144, and what we were looking for was, for the market, what we talked about at the time was if the market continues to trade below 144, it should turn over if the square is right, if the
Mm-hmm.
square worked.
Right.
Otherwise, we'll quickly get on top of it and start consolidating above the square and look to move higher. Outside of a false break, right? So
Mm-hmm.
uh, here we had the cash make a lower high, just barely, and we had the futures market make a false break, which is fine. Um, so I just wanted to look at this to say, well, we're moving away from the 144. We didn't get on top of it.
Mm-hmm.
Now it hasn't started to break down, but it just started to move. And cash, we have an inside bar for Friday. So the rule applies. Watch out for Friday's lower high being taken out. Sunday night, Monday, you know,
Mm-hmm.
and or if we get another inside bar on the next session, which would be even actually that'd be very bearish. So
Right.
so let's see what happens. So for now, looks like the timing is in place, and we're waiting for the waiting for the timing for the market to turn and move on its own time. Here's the Dow again. I'm sure I drew this in the last episode or the one before,
Mm-hmm.
and it just so happens we came and tapped the lower channel line, which leaves us with, well, that's the line we need to break. Once we break that,
Mm-hmm.
we can kind of confirm the highs in place. The Dow also gave us a false break, and from you expect some kind of a fast move coming out of the false break, and we got that. And I would say this is kind of a fast break, fast
Sure.
move down, right?
Mm-hmm.
So if that part's correct, we have an inside day on the Dow also, and we really want to look for a break to the downside. Would be really, it will definitely give us another fast move. And if we go higher, it might be elongated, one of those another lower highs, and then maybe turn down. So that's what I'm expecting from the Dow. S&P, the same story. We did get a false break, and we also from the, look from the outside reversal kind of a perspective, we did get a lower, and we dropped support. Now we're smack in the middle again. Actually, it's 52.50. We're pretty much in the middle of the box.
Yeah. Yep.
So what do we do now? We wait. We stay with the trend, or we stay with the pivot. So this is the big question. And I think we probably should talk about it because it's not all that clear cut when things get started.
Mm-hmm.
Going into next week, clearly, if we take out 52, since we hit both sides this week, we have to look at both numbers.
Right.
If we stay above 5,200, if we stay if we stay within this range, we'll have to look to see how we're consolidating within that. If the sellers are in control, is the buying coming in, we'll have to see that. Either way, if we stay within this range, it's going to look more like distribution than anything else,
Mm-hmm.
and that would push us into the following week. If we take out 5,200, then clearly everything's in place, and I mean, there's no other stops other than the real support's around 48.50, which I don't think anybody wants to even think about unless you're
Mm-hmm.
short. So
Mm-hmm.
so these numbers are definitely in place. 5,000 seems like a reasonable number. We'll have to see where the ultimate high comes in once before 5,200 gets taken out. If these highs hold, 5,200 gets taken out next week, we'll post either on the 30-minute update, or I'm sure Ben we'll post some new targets. But in the meantime, we're holding to see the next bar, since we have inside days on across the board, really,
Yeah.
right? So
I like your targets too. I think if we do get if 52 gets taken out, 5,000 to 4,900 is a reasonable spot, you
very,
know, in
very,
there.
yeah. Mhm. And we can see, I mean, another way to target is you can use here's another a little
One
bit
by
like
two, huh?
like a Fermi test, it'd be like a Fermi method. You want
Mm-hmm.
to look at 1 by 2 and see, where would that come in?
There you go.
So here it's like 4,900.
Mm-hmm.
If you go down to the beginning in October, well, it would take a while, but even if we get down to here, 48.50, it's still well above the 1 by 2.
Mm-hmm.
You know what I mean?
Mm-hmm.
So the trend is still intact. So it would be a big correction, get down into here.
Could be one of those scary bull market, like 5 to 10% pullback type things.
Well, that would that would be great because it's fast
Yeah.
money,
Yeah,
you
that's
know.
right.
All right. Anything you want to add to this? Oh, we're good.
Just that the big thing we talked about too was that monthly timing of being 288 by 180 is looking pretty good right now.
Yeah, yeah. And I think the weekly will probably click that over when it
Yeah.
hits.
Yep.
So yeah, let's take a look at the weekly S&P. I would say, basis weekly, we did hit the ABCD, that I
Yeah,
think
and it's just that's
that's
the
good enough.
market fooling people, right? Pushing a little bit further, just a little
Yeah,
bit further to draw in the buyers.
Absolutely. And that's like the sexiest part about the markets, just going a little bit further, just it's never what you expect, right? It's a little bit, it always does a little bit more than at least the S&P does.
Yeah, for sure.
And so not much to say here. We met the target and let's see what happens. It's only been, 4 weeks since we first met it. It was 4 weeks ago
Hmm.
and we went higher. We had three higher bars. And then it was really this week that we turned down and we took out prior week's low. So let's see what happens here. This is where the daily, you want to see those lower highs coming in and
Hmm.
the market stalling at the right places. Yeah, that's all I have for the weekly. We did a longer coverage, I think, last time, so I don't want to keep rattling on the same thing. Just go
Sure.
on, and we'll do a more in-depth coverage probably next week. That'll
Hmm.
be a time to hit it again. In the meantime,
Bonds are a big
yeah,
story.
let's move on to bonds.
Yep.
And it's a big story, but we had it all down, eh?
Yeah. Yeah.
It's a big
That's
story.
right. Yeah.
And our story's always been the same. It's like short the bonds. And you can see the lower, I mean, we've been short the bonds, forever, but even from the time we went up to 72 degrees, we've been talking about the short side and you can see how beautifully we've been making lower lows.
Hmm.
And now lower, we took out the past, the February low that came in on the ABCD. And I kept
Hmm.
saying, if we take that low out, that's not going to be pretty. We're definitely going lower. And looks like we're starting that.
Yep.
So I'll delete the ABCD there. And what we want to see now is how the bonds are going to behave around 116. So 116.07 is exactly 50% line, 36 degrees up. And well, the thing is, we might consolidate right up against that. But once we take that out, which we will at some point, sooner than later, then we're going to revisit the old low, 144. Well, not 144, but the old low back in October. And we'll see what happens there. So if we take out the 50%, I guess my point is if we take out the 50%, then we can expect the low in October to be tested. And that's a lot of points, 7 points,
Yeah. And
more
think
than
of
seven
this.
points. Yeah.
Yeah. Think of this too, Barry. The monthly is working on its fourth inside bar. So we're
Mm,
we're building up a lot of energy.
hmm
And if we take out that 116.13, which was the low 4 months ago, all
hmm
of that energy is going to get released.
Yeah. Oh boy. Yeah. That's well,
It's
bonds are it's good trading,
yeah.
I think we're getting into that good range of trading bonds.
Hmm.
And let's go on to the weekly. Well, there you go. It's very clear. Not much to add to that.
Hmm.
We definitely made a lower low for the last
Hmm.
2, 3 bars, and 114 is right there. And what we've been talking about every week is if 114 gets you visit 114, we're probably going to take out the low. So let's just continue to trade it, right?
Hmm. Yeah, it's pretty
Um,
clear.
and also just to be, just to clear this up, we have, we have a low here, and I'm sure some people are saying, well, if that's a low, that's the highest rates ever going to get, and then it's going to be trimming. Well, here people could be thinking, well, isn't that a low? And then we're coming back to the first pullback,
Hmm.
and then we're going to rally. Well, that could be. We'll see. We'll see when it happens. But so far, we've been trading lower, so we have
Yeah.
to go with that. And the reason we didn't really call that a low was I really didn't have any, big squares calling that out. We had a square here, the 135, but you can see, the rally that came off of that just petered out and kind of went down and made a low.
Hmm.
And it went too far for a false break. So it just looks like a normal correction, just like we had these other ones on the way down. And now we're continuing to trade lower. So that's the difference. We didn't have anything at the lower. At least I didn't have anything major here to call out. Like that whole thing expired. Know what I mean?
Yeah, the other thing to look at on your daily, remember, I think we were talking about it last week, like one down bar took out picked 6 previous days of the up bar's activity in one day.
Mm. Yeah.
So it kind of gives you an idea of, okay, where's the energy in this market?
Right, right. Yeah, when that happens, yeah, it's just it's
It's
pretty
not
negative.
foolproof, but it is a sign. You
Right.
gotta notice that.
Yeah, yeah, yeah. All right, let's look at the
We're gonna go to the stars of the week, huh?
there you
There's
go.
one of the stars.
Mm-hmm. Been a star for a while, man. It's
Yeah.
been,
Yep.
crude's been behaving really well. And if you guys have been following crude with us, after we got this low 54 by 54, and we've been making, we called out that to be the low, and we were looking for the price to clear 73.50, which we did.
That
Then,
73.50 was key, man. Once it cleared that, it was up, up and away.
yeah, you get it fueled up, right? Broke out,
Mm-hmm.
first checkup, and then boom. And then we spent some time above the 77 level, which is a 50% of the square.
Mm-hmm.
And once that cleared, right there was that, that last day, March 11th,
Mm-hmm.
very fast move coming out of there. And once we cleared 83, we tapped 83 on the 19th. We talked about how, once we get above 83, and the next shot is 91. And I can't see why anything is different. So it
Yeah,
looks
it's
like,
chugging along.
yeah, it's fine. We'll do some, it's probably time to do a good in-depth, uh, take an in-depth look at crude. Maybe we'll do that next week,
Okay.
along with the S&P. So crude, hold the course. Long as any corrections hold above 83, it's very bullish. And we're looking at 91 to be the target. So that's
Mm-hmm.
what we have for crude. And the crude weekly looking even better.
Mm-hmm.
It's just not much. We talk about this every week, and it continues to go. It looks like we're going to challenge the highs made last September, and 96 to 100 looks like the target.
Yeah.
So we'll let it happen.
Yep. Let it
Right?
rip.
Let it rip, let it rip. All right, moving on to gold. Hey, here's the
Star
star.
number two.
Oh boy. Remember when gold wasn't doing anything, and nobody's talking?
What I think is most important is people need to go back and listen to the shows where we talked about how garbage it was trading, but how bullish it was
Mm-hmm. Mm-hmm.
because it was trading like garbage above previous highs.
Yeah,
Going back, 10 years ago, 8 years ago. And it was just
absolutely.
it was a frustrating consolidation for months, but it was a bullish
Mm-hmm.
consolidation. And here's what happened.
And we've been so faithful to gold.
Yep. Yep.
All this,
Yeah, it's
right?
true.
The entire
Yep.
time. Nothing, we never had anything negative to say. And now you know why. This is why we're not short gold. Even well,
Right.
even through here. And I
Right.
said, listen, this is not the place to sell gold. You don't want to be doing
No,
that.
no.
And well, here we go. Now we're on to 2368 is really the next stop. Not much to say, not much to add when the markets are going in your favor, going your way.
Right.
And we're climbing up a very, very steep angle. So we're probably going to go for some, go for broke here. I mean, it could, 2,500 is not out of the picture,
No,
if
no.
push comes to shove. So, a lot of things are happening in gold. A lot of the things that show up in gold is stuff that sort of the undercurrent, things that are happening below the surface.
Hmm.
Um, and well, here we are. Something's definitely happening below the surface,
Yes.
shifting around.
Somebody in the know knows that something's coming
Hmm.
and they're buying the daylights out of gold because of it.
Yeah, I mean, look where we are. So gold, not much to add other than 2368, 2400. That area is really the next resistance target
Hmm.
wise. So enjoy the ride. We don't
That's
have a whole
exactly
lot to
right.
we don't have a whole lot to say when things are moving. So favor.
Right.
We spend a whole lot of time figuring out, strategizing.
Yeah.
Once it's going, you just trade it. Not much. All right. So here's a weekly. 270 degrees up is right around 2423. So there's
Hmm.
your number, 2400, like the target.
Hmm.
And we'll deal with what comes next when we get there.
And
So
that,
far, it looks, go ahead.
as I say, that weekly shows the triangle it was doing, frustrating everybody. and how that was at the previous highs in 23, 22, 2020, which
Yeah,
was not,
yeah,
which was why we were so bullish. Yeah, right
yeah,
there.
yeah. I mean, this is just so bullish, not even funny,
Right.
you know. And yeah, it's beautiful, beautiful chart.
Yep.
Everything is good.
Next
Oh.
star, copper.
Yeah, copper is amazing, eh? A hell of
Yeah.
a week, hell of a
Yeah.
week.
Yep.
And well, the best thing is we broke out. We broke out of the range, and I
And
think
checked your box.
yeah, I think you mentioned that last week, right?
Yep.
I think I
Yep.
drew
I
this
said
out
it pulled
last week.
back right to your box.
Right to the box, and that's it's a box, but it's also, if you didn't have the box, you'll know it's because of the resistance provided by all these other, the floor that we put in.
Mm-hmm.
Check back, took off, and so 455 is still the target that we're looking at.
Mm-hmm.
90, when we get there, we'll have to deal with it. For now, it's really solid because we spent so much time around the 50%, wrapping around this, just building up
Mm-hmm.
that level very strongly. So now you can see how we're making higher lows. Um, so watch those pullbacks, and this is the time to trade copper. All I
Yep.
can say. It's
Yep.
not always that, copper is not something you can trade daily, but oh boy, when it's moving.
When it goes, it goes.
So what's happening with the fork? Well, we can remove it. I think it served its purpose.
Mm-hmm.
Not much to add, guys. We're above the 50% of the square, which is 406. Let's say 407. Upside is 477, and that's a lot there to be had.
Mm-hmm.
Um, I would say, any counter trends that hold above 406, 407 level is
Is really
game.
bullish. Yep.
Yeah, it's bullish, and we're basically good to go till 477
Mm-hmm.
upside. And yeah, and I think even if you did it, let's see where this ABCD goes. But there is one
Mm-hmm.
working working here. All right. So
Right
that,
up
did
to
we
the
do this
full
last
square.
week? We didn't, right? No, I
No,
don't think we did. Okay.
I don't
Just
think
saved it.
so.
So that looks like the path. If that's the case, we have an XCD. So we have a Gartley
Mm-hmm.
working in there.
Mm-hmm.
And so, according to Gartley, if you guys trade that, once we get above 435, we should be ready to go.
Which is not too far away.
Not too far away at all. And looks good. It's all set up. And
Mm-hmm.
maybe we can do some Gartley work on this chart next week.
Sure.
Let's move on to the dollar. Still looking good.
Yeah.
Above the 50% line. We wanted to see it settle above like 104.80, let's say.
Mm-hmm.
Didn't quite do it, but we're pushing. The low held well above the 50% level of the square. And normally we consider that to be bullish. And take it from the low, this low, we're making higher lows from here.
Mm-hmm.
Made a higher low this week, higher high
Mm-hmm.
this week. So,
Mm-hmm.
you know, nothing to trade it. It's not as wild as gold, but there you go.
It's
It's moving
moving in a
just,
bullish manner for sure.
yeah, yeah. It's not time to short it.
Mm-mm.
That's for sure.
Mm-mm.
And let's look at the weekly dollar. Same thing. We talked about this last week. It's a pretty wide consolidation. Now let me tell you, when this breaks, we're going to go again. We're going to go sort of like how we talked about crude and gold
Mm-hmm.
and some of these markets. So it looks like it could really go in a big way. And in the meantime, 106.75, 107 is really the next target. It's holding the trend lines. Everything's okay, even within this weekly big year-long consolidation. So, anything you want to add? The dollar?
I just agree with you. I think it's building up a lot of energy on the bigger time frames. So when it
Mm,
goes, it's going to be a massive move.
yeah, yeah. I think dollar has it's going to be huge. So get ready.
That's right.
Moving on to the euro. Well,
Still,
here last week, huh?
I was going to say it's still dancing around 108.
Yeah, it's wrapping around 108, and it's getting tighter. You can see how the movement
Mm-hmm.
really slowed down.
Mm-hmm.
And so last week, we got under 108, and so the basic premise is still the same. If we get stuck under it, it's weaker, and we can expect it to go and challenge the low from October. And so it's kind of crisscrossing. This is really, we had one day up, we cleared the level, came back, got bought up. Okay, fine. It's acting as support. Let's see, let it clear out this level. You don't want to mess around with it exactly on the 108 level.
Mm-mm.
You want it to have it clear it on a lower time frame, and then you can trade in the new direction. But I don't think we're ready to break out, but we're definitely looking at the short side of this, just
Mm-hmm.
like we're looking at the long side of the dollar. And you can see the downtrend is um, fully intact, and we have a
Mm-hmm.
little triangle forming. And you can see when that thing breaks, it's going to be it's going to be
Big,
good.
big move. Yep. Yep.
Yeah, yeah. So for now, let it do its thing and burn up some time.
Mm-hmm.
That's kind of how I'm seeing it. And it's clear. I mean, that sort of tightening up is clear
On the weekly.
on the weekly, and you can see how long it's been, right? In fact, over a
Mm-hmm.
year, we've really coiled up in here, and
A lot of energy.
a lot is coiled up in here, and it's surprising how long it sort of survived in this range, and you can see how ultra controlled this currency is,
Mm-hmm.
the free floating currency. Um,
And to get an idea of how much energy, these markets are massive. The FX markets are huge.
mhm,
So there's a lot of energy being expended to hold this thing in a tight range.
right. Yep. Yep. So again, 108 is our level, and you can see we're spent, pretty good time on either side of it. So
Mm-hmm.
what it's going to take is to have it get on one side and just break away from that sort of the pull of the 108.
Mm-hmm.
And so far, you see, we go in one direction, get pulled back into it, and overshoots it, come back, overshoots it, come back, overshoots it.
Mm-hmm.
But you can see now the overshooting the 108 has gotten less and less and less,
Yep.
getting very sticky. So once we finish that, so we have that triangle that we drew out in the daily, we can expect it to, find a new direction.
Mm-hmm.
Well, that's all I got. I think I'm all caught up.
Excellent coverage for a
Thank you.
wild week.
Thank you. Are you going to cover natural gas?
No, I'm not going to cover
No?
that
Okay.
today, so you can say
All
a
right.
couple words if you
Yeah,
want,
not much.
because it's
153 is
sideways
holding.
all week,
Yeah,
you know.
sideways. 153 is holding. Let it be. Hang Seng is holding its own. No problem. Higher
Mm-hmm.
lows.
Mm-hmm.
Well, that's all I got. All right. Let me put it back to you.
Okay.
Ben, we took out the trend
And remember, we were talking about the kiss goodbye.
line.
We got that
There.
today.
We'll see. Yeah, yeah. It's
Yeah.
there.
Yeah. So NQs have been leading ES so far, and led in the rally, and kind of making more progress on the downside, giving us a clearer picture before ES. We made the false break high,
Mhm.
had this first pullback, had this first move, and now we're getting a counter trend, and we've gotten two lower highs. So to me, the key thing though is this full square, right? We get below that full square, then this entire structure is
Yeah,
becomes resistance,
exactly.
and we
Yep.
and we roll over.
Hmm.
So we're going to see how that plays out, but let's look at the weekly and the monthly, and I'll show you a couple of things there. So here you can see why this level is so important, that they're banging around up on the daily around this
Hmm.
18,150 area.
Hmm.
If you look at the all week, we've been sort of battling around this thing. And before that, we were getting stuck under. So the next thing is, if we're going to roll over, do we get stuck under that on a weekly basis? So that's really a key level to watch right now, is that 18,150. And then now let's look at the monthly. And on the monthly, you can see timing wise, lots of timing.
Yeah. Yeah.
And this is the big one, right? From the '09 to this high, That's that 180, that the 180 that was coming up on the ES as well, timing
Hmm.
wise.
Hmm.
And we had the 180 into the full square. So is that enough to, to call it? Not yet. So far, we're just inside on this month.
Yeah. Inside
This
month.
month, inside month so far. We take out that low, that's going to be pretty significant. So if we take out last month's low, it gives us a down bar. And what's that number? That's around 17,830.
Hmm. Hmm.
So we'll be watching that as well.
Yeah.
Anything to add here on NQs?
Well, exciting times, man. That's what I could say.
Yeah, and
Uh,
I think you're right. We had this conversation before, but today at the end we'll spend a little time and talk about, what do you do at these turns? What do you look for? How do you sort of transition from one direction to the other? Because it sure feels like we're going through that right now.
mhm.
All right, let's jump over to Bitcoin. The interesting thing on Bitcoin, and I talked a little bit about this last week. I put this Gann fan on just to give people an idea of, here's your one by one. Anything above a one by one is bullish. So
Mhm.
clearly this is a bullish move. But notice what we're starting to do. Here's the four by one,
Mhm.
which we were following we briefly following the eight by one, then we transitioned to the four by one. Then we were gonna say, okay, we came down and tested the two by one. Okay, looks good. We're gonna hold the two by one. Well, this week we lost the two by one.
Right.
So, and if you look, the structure is one of a triangle right now. So
Mhm.
maybe we chop around in here, stay above the one by one as well as this full square, and that can be bullish. But we really got to watch this one by one, because if we transition like we've been doing and we lose that, then Bitcoin could be in trouble.
Right. Right.
Right now the big thing is the full square here, and the
Mhm.
full square there is around 64,800. We hold that, we're in good shape. The resistance is the half square, which you can see the last 2 days just basically stopped any rally on those days dead cold. And that's around
Mhm.
69,300.
Mhm.
So we're witnessing, like we are in a lot of markets, a transition. How that transition is going to play out, we're not 100% sure yet. It could
Mhm.
just be a sideways correction that burns time, and then we could go again, or we could
Mhm.
roll over. We just got to watch these different levels. Anything to add here on Bitcoin before we jump into the commodities?
Well, that triangle is the eye-catching. I'm just
Hmm.
uh waiting to see how that resolves. Um, maybe we should do like an in-depth Bitcoin one of these days just to see how it looks up on the monthly and the weekly that you track.
Yeah, just like a stock of the day type thing, but use
Mm,
Bitcoin.
yeah.
Yeah, that's a good idea, actually.
Hmm. Because that's a big triangle, on a daily basis.
Big one.
Yeah.
Yep. So
Worth
there's going to be a lot of energy built up in there.
Mm-hmm.
So we'll see. We'll see. But I like the idea of doing a single stock Bitcoin show. That'd
Yeah.
be, I
Yeah.
bet we get a lot of interest in that too. All right, let's jump over to the commodities. As I was saying before, when Barry was doing his review, a lot of changes in the spreadsheet, meaning a lot
Hmm.
of stuff is moving, right? It's moving enough to move down a square, up a square, some sort of action that is changing where the pivots that we're focusing on, and that's always a sign to me of uh, you know uh, that slack tide thing where because we have some that are changing to the positive, some like gold and silver and copper, and then we've got others that are changing to the negative, like the softs, like cotton, cocoa. They both change to the like lower table type thing. If you're looking at them
Hmm.
as a ping pong table. So this week we're going to look at corn and soybeans, coffee, silver, and then we'll touch on a couple others. As far as cotton goes, the reason I'm not going to cover cotton, it's pulled back, it's lost the half square, we're back into the consolidation zone. So I
Hmm.
kind of want to see how that plays out. And if we get a setup coming out of there, then I'll focus in on that on the next show.
All right.
But
Sounds good.
let's start with corn. Corn had a decent week. I highlighted it last week. it didn't it looked like it was going to be weak and maybe head down and test the low, and then we reversed up again. Last
Mm-hmm.
2 days we've got higher bars, we've got another higher low in place. So corn, remember the key level was this half square. We got to get above that half square to really get things going, which is around 447.
Mm-hmm.
Once we clear that, then we're challenging the downtrend line from the Russia invasion of Ukraine and the highs in corn around that time.
Mm-hmm.
So this is going to be we're tightening up here. Basically it's, what do they call this? A flat triangle, right? We got a flat top triangle here,
Mm-hmm.
and it's getting squeezed. So
Ascending triangle.
yeah, this week we should see the move coming up in corn as it gets squeezed into the apex of this ascending triangle.
Mm-hmm.
So when we want to watch corn closely, let's take a look at the monthly, and you can see why it's building up energy. So here's your last down bar 2 months ago, which was a 22, by the way. And look at what we're getting squeezed into here. So this is the 2x1 downtrend line on
Mm-hmm.
the Gann fan. This month, or for sure next month, we're going to get squeezed right out of that, right? It's got to go one way or the other. Either it's got to go down and it holds the fan, or we break through, which if you look at the daily and weekly, it looks like we're going to break through to the upside. And then we can run, to the full square here, which is about
Mm-hmm.
547, and up into this 1x1.
Mm-hmm.
So this to me it's a squeeze, and the squeeze is going to break at some point. And looking at the daily, we may break it, in the next week or so. So it really bears watching here on corn. Anything stand out to you on the corn chart, Perry?
Well, I think we're that close to the start line.
Hmm.
So yeah, once we break and start looking, I mean, you could start accumulating here, but I'm not sure if we have to take that risk.
Right.
Even though it's perfect ABCD completion, but it's better once. I mean, the ideal is we break up, come back for a retest, and we start from that point.
Exactly.
Yeah.
But again, the key level is this half square on the daily.
Yep.
Let's take a look at beans. Beans is similar. A little
Mm-hmm.
better because the push off the bottom was a little stronger. But
Mm-hmm.
again, we came down in, made this low here, and then we reversed
Mm-hmm.
off of that low. So here, this is a higher low. This trend line is good because we have a higher high today, and we had a
Mm-hmm.
lower low right there.
Mm-hmm.
So it's packed in tight, but again, it looks like it's poised to make a move higher. Let's go check out the monthly, and you can see what's
Okay.
going on here on the monthly. So on the monthly, we've actually gotten out from behind the 2x1 on the downswing,
Mm-hmm.
and now we're looking like we can push if we get, this obviously it's short month so far, but if the April we can get a higher high, we can push up towards this 1x1, after completing this ABCD down
Yeah.
in
Yep.
in 20 months,
Mm-hmm.
which is a good number.
Yep.
So that's why I'm sort of sanguine on beans and thinking that beans and corn may lead the grains higher
Mm-hmm.
as we're starting to see a high and a higher low appear on these dailies.
Mm-hmm.
Um, Anything else to add on beans?
Well, I was going to say, I mean, that what we really want to see, if you think of the low as the beginning of an A, we want to see the B getting taken out on the next
Hmm.
swing. Then I
Hmm.
think we're ready to get moving.
Yeah,
That's the
right
stage of
here.
the game. Yeah.
And that corresponds with getting above and sort of sitting on top of that full
Mm-hmm.
square.
Mm-hmm.
So I think we're close on those two. We'll see.
Mm-hmm.
See if we get some action on them. Next one we want to look at is one we highlighted last week and previously, and it had a hell of a week. That's coffee.
There you go. Can't say you weren't warned.
we were we were talking about coffee right in
Yeah,
here
yeah,
last week.
yeah.
I mean, there's
You
there's
were all
Friday,
over it, man.
Thursday, Wednesday, Tuesday,
Yeah,
Monday. Yeah. So we were
beautiful.
still Monday, we were still in the triangle, right?
Mm-hmm.
And then the break happened, and there you go.
Yeah. There
And
you go.
these are the kind of moves you get out of these triangles. And this was only
Mm-hmm.
a what, 3, 4 month triangle?
Mm-hmm.
Some of the stuff we're looking at on monthlies in terms of triangles
And those calls
is
aren't like stock options, they move.
they do move. They do
So
move.
the
So
commodities are worth watching and trading if you just wait for the timing. No,
you just got to get the timing right, and you can play these things, and they do
they're
pay off
beautiful.
very nicely. So we're right now the high is right near the half square around 215. So
Mm-hmm.
that's normal. It's making its move up there. We want to see how it acts when we get there early next week. But it wouldn't be unusual to see it pause and get an inside bar or a 1 day pullback and then go again. But this kind of vertical move out of here is what you really want to see. Now check out the weekly and the monthly, because this is why the potential here I think is really big. That's called a
Wow.
breakout.
Yeah, definitely a breakout.
I mean, look at that move.
And so textbook.
Yeah, just built up,
Mm-hmm.
over the last 4, 5, 6 months. Like when did this triangle start? 4 months,
Yep.
early December. And then you get a powerful move from all this energy. Everybody gets frustrated in here. The bulls get frustrated, the bears get frustrated, and then bam, it goes. On the weekly, the target for coffee is around 221, which is right around the half square up here.
Mm-hmm.
Just of the triangle break. If you
Mm-hmm.
measure the triangle break, it
Mm-hmm.
gets you up to the half square, which is a reasonable target short term, because you'll be in this whole mess here that we're going to have to deal with.
Mm-hmm.
But that's a view from the weekly. Here's your monthly. Now I'm going to show you the monthly for a
Wow,
couple of
look at that.
things.
Mm-hmm.
Yeah. We have targets here of, if we just do this ABCD, it's around 315.
Mm-hmm.
If we do the big ABCD, it takes us up to 356, right up in this area of a full square.
Mm-hmm.
And I don't think it's unreasonable,
No,
because
not
this
at all.
this is a monthly breakout. This
Mm-hmm.
is a 3 or 4 month triangle. We had a big move out. The next resistance is going to be up here around this full square,
Mm-hmm.
which is around 250 on a
Right.
monthly basis. So we'll see. Not
Yeah.
saying it's going to be the next cocoa, because we didn't have as long of a base or as big of a base,
Mm-hmm.
but this is what you want to catch when you're looking at these commodities, right? You want to catch them when they're breaking out, not just on a daily basis, but a weekly and monthly basis, because that's
Mm-hmm.
where we get the powerful moves.
Right.
Anything to add here on coffee?
No, I mean, we're doing great. Good coverage. You called it a mile before you even got it within reach. So,
Yeah,
and now it's just time to trade it and watch because of the type of breakout. And next counter trend would be the ideal sort
right.
of safe trade. And from there on, it's just let's trade the trend.
And as you always talk about, like if the next bar on a daily basis, or if you get just an inside bar and then a reversal off
Mm-hmm.
that, boy,
Mm-hmm.
you really want to be on it, because it means the trend is super strong. Because every day this week it was basically up, one,
Mm-hmm.
two,
Mm-hmm.
three, 4 straight days,
Yep.
and closing at the highs, which you always like to see on a commodity.
Yep.
So that's coffee. Um, let's look at. You covered gold really well, but I wanted to show one thing on that. Remember you were saying how, man, gold is at a steep angle.
Yeah.
So this is the weekly. It's following an 8 by 1.
Mm.
So everybody that, if you want to chase gold and all this, just know what you're doing.
Mm-hmm.
8 by 1s are really hard to maintain, right?
Right.
This is a bullish trend here. The yellow is the 1 by 1.
Mm-hmm.
And on a weekly basis, we're doing an 8 by 1.
Yeah.
It's great if you're long. Don't get me wrong. I'm not interested in selling gold. I'm not trying to short it. I'm not saying that, go the other way. It's very, very bullish, but just 8 by 1s on a weekly basis are tough to maintain.
Mm-hmm.
Let's switch over to the monthly, and I want to show you a couple of things here. So on a monthly, if we come off of this low in 22.
Hmm.
We're following a 2 by 1, which
Right.
again is aggressive and bullish and very, very positive, but just know what it is. Even if, and we can move this and you can see if we take it off the last low,
Hmm.
it's a 4 by 1. If we take it off the low over here, we couldn't hold the 1 by 1. Here holds the 1 by 1, I think. Now we're just below. Or we just captured it again. Look
Yeah.
at that
Yeah.
from the 2018 low.
Hmm.
We were following the 1 by 1, lost it, gave it a little back kiss, and now we're
Yeah.
back on top of it.
Yeah. Came back to the
So
1 by 2.
yeah, yep. So gold is, there's no question it's bullish. There's no question that we got higher prices coming. You just got to be careful um, when you look at something that's following an 8 by 1 or a 4 by 1 on these large
Yeah.
frames. Just
Mhm.
be smart. Buy on pullbacks, right? Find
Yeah. Yeah.
pullbacks to support and get involved if you're not involved that way.
Yeah.
Let's cover the one that you didn't cover, the metals, 'cause that's silver.
Silver. Yep.
Yeah. Silver had a really, really nice week. And the main thing we've been talking about on this daily is we needed to get above this whole consolidation zone that we've been in for a long time.
Hmm.
And look what we did the last 3 days.
Very
Pretty
nice.
nice, huh?
Very
And look at
nice.
that.
Yeah.
The 3 days ago on Wednesday, look at where
Hmm.
the open was, and then look where we closed.
Yep. And the check back
Hmm.
inside bar, and then here we
Hmm.
go. Yep.
And then we're ready to go again.
Hmm.
I put this ABCD in so people could see, what's a reasonable target or what's a possible first, pause right near the half square.
Hmm.
So you're talking about, 28 and change up there. Let's look at the weekly, show you a couple possible targets. So 90 up on the weekly gets you to around 28 and change. So right in here
Wow.
is a
Nice.
2862. Yeah. So right about here, that would be 90 up.
Hmm.
The ABCD takes us up, even slightly above the half square, which is right near 30,
Hmm.
which is also the highs in 2020. So nice targets here. Again, in we got a weekly close over this full square of 2750 roughly. So let's see next week if we can maintain that, right? If we can
Hmm.
push up and if we can stay on top of that, then we're on
Hmm.
top of all of this price action going back to middle of 2021.
Hmm.
That would be really, really bullish. Like let's say we consolidate, chop around in here, frustrate people, crisscross this a little bit. What will that remind you of, Barry? Of what gold was doing, remember?
Exactly.
And we
Exactly.
could have that same sort of action, right? Where we go
Hmm.
go nowhere for months and months and months here, but if we consolidate at this level,
Hmm.
like have, what do you call it? Your mean reversion around this full square.
Yep.
If we mean revert there, that will be super bullish for
Hmm.
silver. So it's something we're going to watch and see what plays out. Let's look at the monthly in silver. So 90 up here gives us 56 if we do 90 up, which would be a
Yeah.
massive move.
Yeah, that would be a panic move.
But look, you got Barry, you got a
Yeah.
4-year triangle.
Yeah. Absolutely.
So that's
50 is a fair target from here. Not even a question. It's not even it
yep,
won't even be a struggle.
right. So it's something to watch. Uh
Yeah.
this thing, when silver catches fire, I mean, look at the moves you get. Remember, this is a monthly. This is not a 30-minute chart.
Hmm.
And look at
Another way to find. Do you have more to cover? I don't want to sidetrack you.
just quickly, I want to just show a couple things in copper and a couple things in crude. So certainly you can go ahead, talk.
Yeah, I was going to say another way to find targets is to do ABCDs, but here you can do an ABCD looking at taking the low in '08 to the high in 2011
Hmm.
and the low in 2020. And it'll be interesting to see where that should take us right about a 50, a little bit above 50 target,
Yep.
58, right? that right?
let's see, get you to
No, 50.
53.
So, I mean, that's just a very reasonable target, right? Without even a
Hmm.
stretch, just
Hmm.
normal. So,
Right. And if
yeah.
these things get crazy,
Hmm.
like they did in the 80s, or the 70s and 80s, who knows? But
Well, we're in a lot more crazy right now than the 80s. So,
for sure. And listen, this is what you look for in commodities. You look for the big time frames to break out of these ranges because
exactly.
they spend a lot of time in these ranges, and when they break out, they go.
And you see how often they happen, not that often. So when it happens, you want to be there.
You
So,
want to be on it. You want to
mhm.
be on it. All right, let me quickly take a look at show you something on copper, which you covered, but I want to show you something there. So copper, the weekly triangle target here,
Mhm.
it's right up where you were talking about, almost 4.5, 445. And
Oh.
one of the interesting things here, look what I noticed. Low to high,
Mhm.
102 days, or 102 weeks, sorry, 102 weeks, low to
Mhm.
high, low to high, 103 weeks. So I said, okay, what if we do 102 weeks from here?
Mm.
June, end of June.
Wow. Okay.
And the targets could be, as you were talking about, 445, 450. And
Mhm.
look at the monthly here. Big triangle,
Yep.
clearly broke out, right? We broke out
Mhm.
last month. We have a higher high already this month.
Mhm.
If we do 90 up from this July low right here, this July 22 low,
Mhm.
$6. And look where this ABCD takes us from the '01 low, 2010 high,
Mm.
2016 low, $6.
All right.
I'm not saying that's the target. That is the target. It's written in stone, take it to the bank,
It's a
but it's
possibility.
certainly within the realm of possibility.
Mhm.
And that's again, looking at big time frames, breakouts, when you see these kind of moves, you start looking and saying, okay, what's possible?
Mm.
Then of course the technicals have to, come into play. It's got to first thing we got to do is we got to get on top of this full square on a monthly basis, which is around 442.
Looks
So
like
it's
we're
going
well
to
on the way.
yeah, we get above it, sit on top of it, then we attack the half square, sit on top of that, and then $6 copper doesn't seem so crazy.
Right.
But we'll see. We'll see.
Mhm.
We'll let it play out the way it is. So I showed this last week. I think we were talking about the Gann fan on crude. I think I
Mhm.
showed this. So this one by one we've been sort of battling with ever since the low last year and this move up. Look
Mhm.
what's happening this week, Barry. We're
Yeah.
almost on top of the one by one.
Right.
And this coming week, as long as we don't take out next week's low, we will be on top of the one by one.
Mhm.
So crude really looks strong. It's
Picking
it's
up
a
some momentum. Yeah.
it's starting to pick up momentum. Exactly. Here you can see it was struggling with the one by one, then it was firmly on top of it, and now or firmly like in between, and now it's getting firmly on top. So for whatever reason, it's starting to push on crude.
Mhm.
And then the monthly, this month we broke the two by one on the downside that was coming down from the high.
Mhm.
So
Yeah.
this opens up a move up to the one by one, which is right in your targets, 90 upper 90s to 100.
Mhm. Mhm.
It's open, as long as we don't take out the low that we've gotten so far and get back under this two by one, we can even, it doesn't even have to be strong, but we'll drift up into that one by one. So crude has some potential as well.
Mhm.
As you were showing, when the charts you were reviewing. The interesting thing to me is the money that was flowing into these commodities, the gold, the silver, the copper, the crude, the coffee. I mean, it felt like money was really, really anxious to get into these markets.
Hmm.
It wasn't like, oh, let's just buy a little here, let's buy a little there. It was like, get me a position, get me a position, get in there. And that was really quite evident when I was watching the markets this week and doing the chart review. So Barry, let's spend a few minutes and talk about the subject that you touched on in the beginning.
Hmm.
We're at this point where it feels like we're shifting in different markets from, like if you're talking about commodities, long-term consolidations or corrections shifting to bullish
Hmm.
markets. In the risk markets like the ES and the NQ, we're shifting from, like after a strong bull move, correction, consolidation, reversal type situation. So
Hmm.
how do you mentally, because I think mentally is the important part. We're showing, through our chart review, sort of mechanically how you identify it and what you do. Mentally, what do you do to make sure you're not, mentally fighting the last battle instead of the current battle that's actually taking place?
Well, I mean, the mental has to be supported by the technical, eh? I think there has to be a link there.
You want me to give you the chart so maybe you can point some
Let me
stuff
do
out?
that. So, I mean, it doesn't matter what the chart is. So this is the 30-minute chart that I've been posting on X. And so we're talking about, trends versus corners, right? And
Mm-hmm.
when something new starts. Well, with our work, I mean, I can only speak to what we're doing. So with our work, it all starts with timing. If there is a trend happening, and this is a trend, it's a sloppy trend, but nonetheless, we have a trend
Mm-hmm.
going, or the trend down, or we can look at this, pick this, we had a correction, and here's a trend moving higher. Okay.
Mm-hmm.
So, and this could be daily, monthly, whatever. So let's say we're trending. So long as there's no timing coming into play. Okay. So timing meaning, do we have price and time hitting this, hitting price at a certain ratio?
Some
Long
sort of
as,
cycle, right?
yeah, some kind of cycle, or sometimes often, we have multiple cycles.
Mm-hmm.
If there aren't any cycles or they're minor cycles, well, we want to take the trend and just ride the trend. Now, the only time, sort of a yellow flag goes up is when we run into some kind of timing, just like we did with the S&P. That's what I want to do. Let's switch to that.
Yeah.
And then we can look at the real time.
Mm-hmm.
All right, so this will be a good real time example. Okay, let's take it from the last high and the correction down into the November. So coming down into that low, I remember we had timing, and from there we started moving. And I know we had timing here and possibly here. I can't remember exactly, but anyway, there was a couple of timing cycles here that the market just went right through after a minor correction. And so so the way the psychology and how I sort of connect the two is long as there's no timing coming up, like here we had 144 by 144. So there we have timing. Okay. In here, we really didn't. We did have some minor timing, but you want to wait for something solid to show up. If the timing is there, then it's either gonna market's gonna continue through the timing cycle, meaning because we have price and time, we have two elements to look at. If
Mm-hmm.
in time we exceed the number of days or bars and we go higher or lower from the target, we know it's exceeding in some way. Then it cancels the cycle. We don't have to do anything. It cancels a potential pivot, so we don't have to do anything. On the other hand, if we have timing and the market responds to that, so here's a case where it's starting to respond. So we had 144 by 144, and the market went up, lower high, kind of lower high, and kind of sort of dropped down, sold off a little bit, inside bar. So like I said, I mean, the best thing that could follow an inside bar is to have the low get taken out. Then everybody can hop on that.
Mm-hmm.
So the psychology, if we've been bullish, the longer the market goes, past 3 months, the more cautious you have to sort of be, because it's not often that we get huge 6-month, year-long trends.
Right.
Um, And then you start paying attention to the timing, the cycles. And every time you have a square, and we can take this for an example, you want to see if the market's indicating that a potential high is in place. The way it indicates is it has some very specific patterns that are highly reliable. I'm sure there are lots of patterns, there are candle patterns, all kinds of patterns, but there are like three patterns that are reliable over time. And reliable meaning, these are patterns that you can trade every time and the odds are in your favor. So there's nothing
Hmm.
to worry about. It works out over time
Sure.
as long as you take the trades. So one of them is following it, squaring out or expiration of a cycle. You want to see a lower high be made, and that's where you want to put your first trade on. First, take the first shot at a new trend, and if it continues, great. That's your new direction. The second one, if you get a false break, and you want to get positioned somewhere between the false break and the next bar, and if it continues, great. There's your new trend. The other one is if sort of consolidate and then come up with the false break or lower high, right? Lower high can range with, it could be a 1 day, let's say we make a high, 1 day down and then a counter trend and then down again, just like it happened here.
Hmm.
So there's a number of ways they can show up. So, the more work you do with the markets, the more familiar you'll be with the patterns. So long as the high of the cycle holds and you get some kind of a marker that shows or signpost saying, hey, the market is kind of showing its hand, it's done with this, then that begins your the new direction, and you have to trade like that. And you can watch your support resistance levels till we get the momentum going. Right here we don't have all kinds of downside momentum going because we're kind of flattened out here. See,
Hmm.
went up. So you want to keep an eye on momentum, and you want to look at your resistance points above you to see where we're stalling out. Like we look at the 30-minute, let's jump back to the 30-minute, for example. Here, you can, here we called out this being a false break uh, that day, and 5304 was the support. Ideally we wanted to hold above that,
Hmm.
and we couldn't. Came back to retest, we couldn't, sold off. And here's the sort of the ideal retest and ideal lower high. So we have the high, even with the false break or whatnot, this is the ideal textbook check back. 5304 was the resistance. So we came up here, did a little false break even there. You can see that, the
Yep.
false break, and then
And then
sold off.
gone. Yep.
And then when we talk about a false break, fast moves being followed after false breaks, it's here, fast move, there's your fast move. So what happened here? We were looking for a high to come in. Now we're looking for evidence. Okay, what's market has to show us that the high is possibly in. Well, these taking out the prior lows, which we did, then really, really struggled to get back up. And
Right.
then and you can read this. This is really struggling. This is not like everybody's just throwing money at the market. All this. And
Hmm.
then we had the new spike, and that's where they get the last bag holders and then false break. And so this is the next section. And we always talk about, like, when if you're trading Gartley stuff, that pivot low is the signal. If that low goes, that's, you can sell it there and stop anywhere in between here and the high or above the high, and there's your trade. And once that low gets taken out, you move your stop and you get a risk-free trade for the rest of the time. And that's kind of the overlay you want to use with all the corners. Just to review, we're working with the trend till we get a timing point. And if we get timing, then we look for some evidence from the market, which would be in the form of a lower high, false break.
Hmm.
And then we look for signs for it to continue in the new direction. It's, overall, it's that simple. And if for some reason, if we take out the old highs, then that nullifies the entire thing, and we continue to trade in the same direction, get back on the trading bandwagon, right? Trading the trend bandwagon. So
And
it's
this
really,
is this
go
is
ahead.
so important because as we were discussing a couple weeks ago, the market always looks great at the highs and terrible at the lows.
Yeah.
And
Exactly.
so you have to the thing that I'm hearing you're telling everybody is the starting point is not you're not trying to pick a top. You're waiting until we have some sort of timing or some sort of cycle comes in, and then even then you're not picking the top. You're just waiting and saying, okay, now do I get the technical evidence, the structural evidence in the market that tells me, okay, this timing is good and we need to pay attention.
Hmm. And to connect that to the psychology, it's really about your experience. You know, it's like action reaction. Once you get used to how the market behavior happens around these corners, then you automatically sort of tend to go with it instead of fighting the trend or fighting the other side. There shouldn't be any resistance to the system that you're using, which
Hmm.
means you should really trust your system. And the way to trust your system is to spend a lot of time and build enough data sets. So you build that trust, right? So,
Hmm.
and Gann always talked about going back and studying history, historical charts, go back 100 years, however long, many years you can find. And part of that is the psychology component, because the more you work with it, the more you understand how different markets behave. Uh, the easier it is for you to shift the direction, because you kind of, you know, it's like coming to a stop sign in a four-way and you have to make a right turn. You first time driver, no license, you know, your child, you know, wants to make the turn. Well, my God, they're going to be in a panic looking at all the different directions. But once you've, you know what I mean? But once you've
Or not
done,
looking in any
or
direction.
exactly.
Right.
And traders is the same way. They come into a corner, you know, all kinds of things could happen. So I think part of it is that having enough experience. So if you've driven for 50 years, you pull up and you exactly know exactly what to do, very intuitive about it, and also
Right.
very aware. And your system knows, your internal system knows. So part of it is that. I think experience helps you with that, and spending a lot of time with the charts and your tools will give you the experience. And that's really how I kind of see it.
And I love the fact that we are in, as you discussed, this is real time. We're going through this with you all. We're all going through this together
Yeah,
because
exactly.
we
Real
don't know
time.
that it's a top. You don't know it until after the fact, right? There's
Right.
no way of knowing when it actually, the moment it occurs, there's no way of being 100% sure it's the top or it's the bottom.
It's
And
so it's
what and
always probabilities.
that's it's right. It's always about trying to stack the odds, look at the evidence and see, what does the evidence, what do the cycles suggest? What does the technical evidence suggest? What does the structure suggest? What does the sentiment suggest? And then you get these, you sort of put it on the scale and you see how does it weigh out? What does it
Hmm.
tell you is more likely to happen?
Right.
And we're going through one of those periods as we speak. For the last few weeks we've been talking about it. We've been talking about the importance of this timing on a daily, weekly, monthly, big time, big picture time frames.
Hmm.
And now we're starting to get the price action and the technical evidence where we can have more confidence and have a higher percentage chance of actually saying, okay, yeah, hey, that was a top, or hey, that was a bottom.
Hmm.
And
Hmm.
so every week we're going to try to give you a flavor for, okay, what's the evidence that we got this week? What are we seeing
Exactly.
that either
Hmm.
supports the case or refutes the case? Because we don't want to be locked in to any one scenario. We got to be open to all possibilities.
We have to be flexible as traders, right?
Yeah, that's absolutely correct.
Hmm.
100% correct.
And when you said that, I just realized if people just follow us on any of the, like when we got the highs and the lows and the crude, we kind of did take a step by step, explain every week,
Right.
and cocoa and a lot of the things that we were trading in the commodity side, we did take it way before it started, and then step by step. Okay, how do we know the lows? And kind of like what you're doing with corn
Right.
and coffee and all the things. So yeah, that's a basic idea.
It's a process. It's
It's a
an absolute
process, yeah.
process.
And the experience is really the key to give you some sanity, keep you sane. Is really experience. You just can't do it without seeing for yourself. That's what I've found, at least for myself.
I agree with you. It's
Yeah.
it to theoretically, to understand a top or a bottom is one thing, but to go through it and to feel the emotions and to feel, feel that sentiment in the market when the turn comes, you can't
Mhm.
you can't read it in a book and understand it. You have to go through it.
Exactly. And that experience really depends on the individual. You know, some people are very sensitive to outside elements and your own fears and risk and so forth and so on. So I think everybody has to spend the time, then they kind of know where their baseline is, in the middle of a trend, how sensitive they become, towards the top, towards the bottom. Are they fearful at the bottom like everybody else?
Hmm.
And do you
Right?
lean on your technicals like you're supposed to, or do you read all the technicals, all the headlines till they all agree with you.
Yeah.
So
And there's a
yeah.
price to be paid for that in the markets. Unfortunately, that's the trading will exact its toll if you do, rely on the
Hmm.
headlines, and
For
it's
sure.
not fun. It's definitely
Yeah.
not fun, and it's not fun for your trading account. But
Hmm.
we are having fun. And listen, Barry, this was a terrific show. I think this discussion is important. We'll continue to have these discussions because while everybody or most people may learn something from it, Barry and I talk about it all the time. Whenever we get into these discussions, we
Hmm.
remember things or we learn something new or we think about an angle that we hadn't discussed in a long time ago.
Hmm.
So we all benefit from it. So we'll try to keep doing these. So have a great week, everybody. Barry, have a terrific week. Great show, and we'll talk to you next week.
Good job, Ben. Thanks. And we'll see everybody next week.
Sounds
Same time,
good.
same channel.
There you go.
All right. Bye bye.
Bye bye.